Hey everybody, Economic Ninja here. I hope you are doing great. You know what's not doing great? Gold. Gold price going down, it's crashing. Actually, it's funny because the day before it started, I did say get ready for a pullback, and these are good times. We saw it top a little over 2,400. As of the recording of this, we're in like the low 23s. And it's going to separate the bulls from the bears, or just the bullish people that are only diving in because they think it's going to go higher, or the people that have sound fundamentals behind them. I'm going to share a story, and it's a big deal because the world doesn't care. As a matter of fact, the world gets excited on days when gold is crashing in price. And to say it's crashing really isn't a good way to put it. It's going down in price versus the dollar right now. Check this out. This is out of Market Insider. It says gold prices have another 29% upside as China's central bank continues its buying spree. Famed economist says 29%. That's a lot higher. Okay, here we go. So right here, gold prices are set to continue their record bull run. As far as because we're talking a bull run to $3,000 per ounce, according to David Rosenberg. Rosenberg highlighted a buying spree from China's central bank as one reason why prices will rise. So it says here, famed economist David Rosenberg is feeling good about where gold prices are headed. He noted on Monday, Rosenberg outlined why he expects gold prices to continue their record bull run to $3,000 per ounce, representing potential upside of 29% from its current levels. Rosenberg said China's central bank is on a gold buying spree, having bought gold reserves for 17 months in a row, and it could have a lot more to buy up as it pushes its gold reserves higher. We're talking levels comparable with other central banks. China's drift from the U.S. is behind its slow but steady rotation from the U.S. dollar reserves to gold, and also means the end of the yuan as a potential second reserve currency, pushing other central banks back toward gold, Rosenberg said. Over the past year, China alone has purchased about 181 tons of gold. How many have the U.S. bought? I'll just put it down below. I'll just say it. I don't even think they've got it in Fort Knox, to be honest with you. But anyway, and now we're talking about China being the sixth largest holder of gold reserves, bringing its share of total reserves to 4.3% in March. But its share of gold reserves is tiny compared to other central banks, with the global average being 13%. That means there could be plenty of runway left for China to keep adding to its gold reserves. The U.S. holds 70% of its reserves in gold. I'm not joking. I don't believe it. So, I mean, honestly, how many of us believe the government? I don't believe them at all. Like, what did Ronald Reagan say? The most dangerous words you could ever hear are, we're from the government and we're here to help. So there is an incredible room to run for the PBOC over the next few years just to approach the global benchmark of gold reserves. If China added just one more percentage point of gold to its reserves, that would imply 420 tons of gold, which alone would consume 11% of new production. Look, I'm going to be honest with you. I think China wants to be known for, we own more gold than everyone. Why? Because they're building an entirely new economy with Russia, India, Brazil, and all these other countries like Saudi Arabia, and they want to be known as being right at the right time. I think gold has a massive run coming ahead of it. I'm not telling you to go out and buy it, but I'm telling you I own it for a specific reason. I buy what central banks are buying. So, hope you guys got something from this. With all that being said, the Economic Ninja is out.